Hey everybody, thanks for joining me again. This video is going to talk about the top 7 mortgage mistakes that you can make. So stay with me and I'll take you through each one of them. So the first one is late payments. You know, it sounds silly and it's self-evident, but do not make any late payments. I don't care if it's the smallest amount. Any late payment is going to hurt you. It's going to hurt your credit. And depending on what you're paying late, like a mortgage late, if you own a home now and you're trying to buy a new one, no mortgage lates. Don't do it. So if you have late payments, or if you think you're going to be shopping for a home over the next few months, you need to make sure you're staying on top of your credit and on top of your payments. No late payments. Number 2, do not buy a car. I don't care if the beater you're driving right now is falling apart. Figure it out. Do not go out and get yourself a new car knowing that you're going to be shopping for a home or applying for a mortgage soon. Just don't do it. Even if you just got a pre-approval or you got approved and you're supposed to close, in a few weeks, do not do it. Some lenders are going to rerun your credit again, and if all of a sudden this new payment comes up and now you don't qualify, you're going to screw yourself. Do not get a new car. Paying off debt. Don't. Sounds crazy, right? Do not pay off debt, because what you want to do is wait until you sit with a loan officer who takes a look at your situation, your financial situation, your credit situation. If you already qualify with some of the debt payments already on your credit report, you do not want to take potentially what little savings you have and pay off something when you might need that savings to actually qualify for the mortgage, either for the down payment or the closing costs or even the reserves. So what you want to do is wait for your loan officer to explain to you, okay, here's what we're working with. No, I want you to pay this off, or don't pay anything off. If you just go right ahead and just take all of your cash and start just paying things off, you might pay the wrong things off. Strategically, you need to let your loan officer help you with that. Do not. So number 4, changing jobs. If you can help it, do not change jobs, especially leading right up to when you're applying for the mortgage. Some lenders view that as a negative if you've just changed jobs. Listen, there's going to be plenty of instances where you've got no choice and it's an opportunity. You're going to make more. Obviously, you do that. But if it's just trading off, one type of job for the next and the salary is the same, and you could potentially wait until after your mortgage closes, then wait. Okay, so now when it comes to a 2-year work history, you should have two years full employment, and it doesn't matter if you've changed jobs during that 2-year period. But what I'm talking about is recently. It would not be good if you've just changed jobs as you're applying for the mortgage. Okay, changing from W-2 to 1099, 1099 to W-2, going self-employed. I just had someone call recently who has been a W-2 employee forever and just decided, I think I'll open my own business last month. And now what? You're not going to qualify. So you don't want to be jumping from self-employed to W-2 and vice versa in this short time period within 2 years of applying for a mortgage. You might be able to get it done if it was over a year ago. There's some mortgage programs where we could figure that out, but you don't want to make that change right now if you know you're going to be applying for a mortgage. Okay. So number 6, accepting forbearance and taking advantage of it, especially when you don't need it. I've done other videos about mortgage forbearance. If you've accepted forbearance, there are going to be plenty of lenders who will not approve you for the next mortgage, even though they're supposed to. You definitely have to be out of forbearance and back to making mortgage payments again if you want to buy a new home or refinance the existing loan. But if you could help it, if you can make the payments, do not go into forbearance. That was number 6. The last one, number 7. Realtors, don't take this the wrong way. Other lenders, don't be offended, but don't just go with your realtor's lender. I know that realtors want you to because they're comfortable with them and they provide that communication that they like, but it doesn't necessarily mean that that's the right lender for you. It doesn't mean that they have the right program for you. It doesn't mean that they have the lowest rate or the lowest fees or what have you. That's who your realtor's comfortable with, because in the end, your realtor just wants your loan to close really at any cost. And you want to make sure that you're working with a lender that can do it at the right program and at the right cost and at the right rate. So all I'm saying is don't just go with the realtor's lender. Interview the realtor's lender along with others, and then make your own educated decision. So hopefully those 7 mistakes you will avoid, and like the video so that way it'll be saved in your library of liked videos in case you need to refer to it again. I appreciate you watching, and come back next time. Thanks.